I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. Happy Sunday, everybody. Awesome video for you today. I have the exact date the market will bottom, the S&P will bottom. I'm going to share that with you on this video, show you how I got the bottom, and show you the symmetry in the market. So you guys are going to understand the patterns at play here in the marketplace. We also have the usual suspects to discuss. We have Bitcoin, we have equities, we have commodities. I added oil. A lot of you are asking me questions about bond yields. We're going to talk about that as well. Guys, this is going to be a great video. I'll try to keep it shorter than the previously 40-minute videos, okay? So let's just go ahead and get into this. Guys, this video is going to be brought to you by SimpleFX. Everything you see that I show you here on my channel, you can trade on SimpleFX, including the individual equities. Check them out. It is a decentralized exchange. They cannot trade against you. The tutorial guide, the link for our bonus, which is up to $5,000, are all in the video description, as well as instructions how to sign up. And guys, if you want to trade just a traditional crypto market, check out BingX as well. Our link and everything is in the video description, as well as will be pinned in the YouTube comment section. All right, let's go ahead and get into this, guys. So what's going on in the world? Bond yields are cratering. So a lot of people have been messaging me, Brendan, doesn't this mean the market should get bullish? Well, let's talk about why bond yields are cratering. The market's already pricing in a rate cut here in the summertime, a rate cut. So Powell just raised rates last week and the market's pricing in a rate cut. So let's talk about, is this a bullish narrative or a bearish narrative? Well, guys, why would Powell cut rates? So inflation's 6%. Okay, just put this into your brain right now. Inflation is 6%. So if the market's bullish narrative is, well, inflation's dropping really quickly, do you think inflation's going from 6% to 2% in 10 weeks? No. What's the other reason the market would be pricing in rate cuts? Because come on, because of a financial disaster, okay? See, you have to understand for 70 years, every single Fed rate hiking cycle has led to one of two things, sometimes both those things. The first one being a financial crisis, which you could argue we just had with the banks. The second one being a recession. Sometimes they go together, just like the great financial crisis, okay? So you need to understand the bond market is saying, hey, you're going to be cutting rates because of what? One of two things. Either inflation will be at 2%, not going to happen, guys, or because of a financial crisis. And that financial crisis will not be a bullish indicator for the markets, guys. And if inflation did go to 2%, let's just say magically it went to 2%, why would it go to 2%? That would mean the economy cratered. That would mean unemployment doubled or tripled. Unemployment goes up at a 3.6% ratio for every 2% inflation drops. Played you that video clip several videos ago. That has held true since World War II, meaning our inflation rate to go down 2 points would have to double our unemployment. So now we have 4% inflation at that point. And to go to 2 points of inflation, well, we would be tripling our unemployment. We would be above 10% on unemployment. And this is too small of a window to happen. So the bank crisis has priced this in to the bond market. You have to understand, in the trading world, this is a stereotype, but it's very true, I think. The smartest investors, the smartest traders are the commodity and debt market traders, okay? The dumbest traders are historically the equity traders. And as a prime example, I can give you Jim Cramer on CNBC or Tom Lee, okay? Tom Lee's out there saying the bottom is in and we're going up and this is going to be a bull run. Jim Cramer obviously famously picked buy signals for Netflix and for Meta right before they cratered historically. He had SVB, Silicon Valley Bank, as one of his top 5 stocks to own this year. These are just 2 examples, and it's a stereotype, but in general, it's true. Why is oil prices cratering? Because they're pricing in a recession. That's what you need to understand. So even though there's a conflict, even though there's a potential for that to escalate, and there's supply shortages, oil has the bottom has fallen out. You're down over 50% from its peak because the commodity traders are pricing in a recession. So guys, we have to talk about the S&P pattern here on my screen because this pattern, as you guys know, I've been showing you this in line form chart. I'm going to show you how you can sequence this to get predictions. This is all without fibs, okay? So since we've been going sideways, we've been moving at 43-day pivots. There's your bottom. There's your top. There's your bottom. By the way, exact bottom, exact top, exact bottom, exact top. And then this top was almost the exact top within $20. Okay. So what we have now is an April 14th date. Earnings season kicks off in April. If the market can keep this bullish trend that has been on since October, we have an exact target I'm going to share with you on the next chart as well. But if we keep this bullish trend, as we've been talking about, this will be your trigger. April 14th will be your trigger for the market to start declining. Now, keep in mind, the market can start falling apart. This week will be a very key week, the week before earnings. Let's see if the algos kick in and start dumping equities. But as long as the S&P keeps holding the 200 moving average, which it closed above once again on Friday, guys, there's always that striking distance for some upside. So notice these pivots play all the way out. They've been historically accurate. And if you bring this out, guys, I'm going to show you some market patterns, market symmetry, key concepts here in geometric trading. So April 14th will be our sell signal. That means our bottom would be on June 14th, 2023, which would then mean, let's go ahead and play this out, which would then mean August 14th, you'd be rallying up and then coming to your final bottom, October 12th, 2023. Now, the fall equinox is September 23rd, 2023. Now, in the Y2K, we bottomed, I believe, October 4th or 5th of 2002. Now, let me show you what's really interesting about this, okay? So you want to talk about some market symmetry and patterns here in the marketplace. When did we start our rally over here in June? June was our bottom. We rallied up, okay? Now, if if we come down and sell off here in April, that means once again June is our bottom. And look at these dates. Wednesday the 14th, June 2023. Thursday the 16th, June 2022, okay? 2 days apart. So we would be coming up on our bottom, rallying up to August 14th before we sell off to bottom in October for our final bottom. And look at this, rally up from June, make your peak in August 16th, again, 2 days difference, and then fall down to your bottom October 13th. And what's the date for this bottom? Thursday, October 12th. The market likes to move in proportionality. It moves in symmetry if you can find the rhythm of the market. And so to translate all this, in case you're not paying attention, to translate all of this, the final bottom, according to this pattern, is going to be Thursday, October 12th, 2023. And we can go over those targets as well. But guys, this pattern's tracking 100% true. Now I'm going to show you something even more interesting. Okay, let's go ahead and go back. I want to show you something about market symmetry. So let's go ahead and look at this. So this sell-off, okay, you see your steep decline here, and then you can see your Wyckoff accumulation back and forth, back and forth. Let's just go ahead and get a measurement here of this sell-off. Sell-off from peak to trough, 21%. Now, what is the rally up? Okay, the June rally to the August top, which we're going to see again this year, 19% roughly. And then, of course, the August top down to the October bottom, which we will see once again, 19% again. And then what is the rally from the October bottom up to your December 13th top here? 19%. And if you carry this out to where we are now, because you never lost this bullish uptrend, you are sitting right here at 20%. So do you see the proportionality in the market? These are all roughly 19, 20% moves. Very key to understand here in the marketplace because you can time this out. So let's just say we rally up to, I don't know, 40.80, and I'll show you this on the next chart, okay? 40.80. If we know we're moving at 20% moves, where would 20, this is all without fibs, guys, where would 20% get you to here roughly on my chart? Roughly about 3250, okay? 3260. Remember, my target is 3141 to 33 or 3400. So this is just in line with how the market's moving. 20% down moves, 19, 20% up moves, 19, 20% down moves over and over and over again. So this is really key to understand, guys, because the market moves in very defined, very clear patterns if you can decipher the patterns. This is all just part of sequencing. So this, again, we're just repeating the exact same pattern as last year. You don't even have to go back to .com because you guys know I have the .com pattern that we are tracking to beautifully. You based in June of 2022. You rallied up to August, then you sold off and bottomed in October, and you're setting up to do the exact same thing again. And when was this top over here, by the way, that you fell from? That was your April top, okay? You see this March 30th, April 1st, right here in this time frame. You sold off in April to come down to June. And what are we approaching for April 14th pivot? We could be selling off to come back down into June. The market is literally repeating the exact same rally and selling cycle as last year, and nobody else sees it and nobody else is talking about it, but you guys are getting it here on this channel. So this is absolutely fantastic information. If we do hold this bullish uptrend or even just go sideways or even slightly down here because you've been in an uptrend since October, this is your pivot April 14th, halfway through earnings season, and this is when you should be selling off for your June bottom and then your rally up, okay? Let's go ahead and look at this here on the daily chart for the S&P. S&P, as you can see, here's our bottom, and I use this as our, well, I've had the same wave here, as you guys know, for multiple videos now, but lots of people keep asking me. This is October 13th, 22, guys, and then this is December 13th, and then this candle is the 22nd of December, okay? This gives you your trend-based fib here on the daily chart. This is our short we took here at 41.66, 41.80 was our actual entry point, and then price sold off, and you can see the 45. And look how accurately the 45 is tracking. Look how beautiful that is tracking. And now you're getting rejected at the 45. The interesting thing here is, guys, if you just keep this up, if you can just keep bobbing up and down here along the 200, this white line's your 200 here, bobbing up and down here along the 200, just like this. If you do not break the 45, then that target is literally 40.80, okay, on April 14th. That could literally be your local high here on April 14th. If you just keep the same pattern, sideways consolidation going, if you break above it, you need to watch 41.66. Why? Because this is where you fell from before, okay? So these are your two upside targets you need to pay close attention to. And that, of course, is assuming the selling programs, the algorithms don't just kick in this week and really start breaking this thing down. But as of right now, if you keep this uptrend, you stay above this 200, just watch to see if you keep banging your head and get up to 40.80 or 41.66, and then you come down, because that would be the exact same pattern that we did last year. Let's go ahead and look at a couple of, I want to show you some individual stocks up front here. Then we're going to do Bitcoin next, okay? Because these are some targets that I'm tracking personally. This is First Solar. This is the Greta Thunberg type stock of the left. Okay. This is, solar power with the ESG investing, a big meme. It's basically a meme stock for the liberals because the company doesn't make any money. It just loses money every year. But look what it's done. This is insane. Since July 2022, it is up almost 260%. This stock, which you can trade on SimpleFX, guys, has a 188 PE. The Nasdaq itself, so it trades in the Nasdaq. The Nasdaq itself is trading at a 22 PE. The PE of First Solar is higher than Nvidia, which Nvidia is up, 84% this year. 250% up since July. And look at the pattern this thing's throwing here. So let's go ahead and put this thing on fibs, okay? So the way I'm playing this, and I'll show you this here on the fibs, I'm gonna take a trend-based fib. Let's go ahead and grab this wave, all right? Right before this impulse up, daily time frame, right before this impulse, and look exactly where you got to. Basically 218. Yeah, you got the 218 over here. 218.47 is your 1414. Beautiful double top forming. You tapped it again. So if the market does keep banging its head and get a little bit more volatile or even shows any signs of strength, look and see if it starts to move up to 218. And if it breaks 218, then you're looking at 227. Okay. But if it keeps this bearish pattern going here that's building a beautiful double top on the daily time frame, I would love to get a hold of this thing between 212 and upwards of 218 if this holds in place. If the S&P starts rallying, the Nasdaq rallies more, then obviously take that into consideration and look at that next level quadrant of 227. But this thing could have a massive downside. A 188 PE before the market rolls for an unprofitable solar company. Now, I love solar, guys. I have solar panels on my roof. I have a battery pack. I have a generator. Very expensive. And I'm just saying, when the recession comes, people aren't going to be spending tens of thousands of dollars to do what I did at my house. Okay. It's very, very expensive. And this stock is so overpriced. So many gaps on this thing. Look at this thing just shooting up. This is going to be an epic downfall if you can grab this at the top. So watch those numbers. Nvidia, we just went over this, but Nvidia off its low here in October, up 155%. Again, target selection is key when you're looking at trades, guys. So we'll go ahead and throw Nvidia here on the trend-based fib, grabbing this wave, boom, 1618267. Now, I told you last video, we shorted this. I got in here at 274, and you got just below the 1618. You're like 4 cents below it now. So it's retraced. I guess it was down a couple dollars more on Friday as well. So depending what type of trade people are setting up, some people may have taken profit, other people may just be holding it. But again, this is another one of those trades. It flew up. Everybody's super excited about AI and everything. But this again is going to come back. It's way overheated. It's too overheated. And on the weekly time frame, it's overbought big time. Okay. So again, if the Nasdaq moves up, this could have a little bit more upside. I don't think it has a lot more upside, but if it does, just watch for it to build a bearish shape. But right now, this is right at the 1618. I want to see what these markets do, because if the S&P keeps hitting his head, this is going to be fantastic. Tesla, guys, up 113% off of its October low. We covered this one as well last video. 214.68. If you come back up for a co-equal high, if you come up anywhere, I would say between 206, or we can just pull this fib here and do it like this. Yeah, I like 206 at the 786. So if you can get back up to 206, you're at 190 right now. 206 and higher. If you hold that 214 area for this beautiful double top pattern, guys. Again, another potential trading opportunity that I will be considering. Let's look at the Nasdaq and Bitcoin once again, because the Nasdaq, again, the exact same 95% correlation. By the way, guys, did you notice when the Nasdaq went down late last week, Bitcoin pulled down? When the Nasdaq went up, Bitcoin went back up. That's because it has a 95% correlation, okay? So just keep that in mind when you're looking at Bitcoin. Bitcoin on the daily time frame, stacking candles. Again, this looks to me like I told you, what, a video or two ago, you're setting up for a double top potential here, okay? So this all depends if Bitcoin wants to move back up. But let's zoom into the smaller time frame. I want to show you this on the 8 hour. You have more candles, but let's look at the chart or the indicators here real quick. Money flow. Again, we got overbought coming back down. Looks like, see, again, you can see it in the money flow. What's most likely going to happen is a double top, right? You bounce off the moving average, you come back up again, which means you'd be doing something like this. If you get a little bit more bullish, you come back up again and you make that double top. That's what I'm thinking is going to happen with Bitcoin, but we shall see. Looking at this on the 8 hour, not, it's not looking great. You're holding support here. You already have the double top here on the 8 hour. And what could happen here, guys? Again, depending if the S&P can keep hitting its head all the way out to April 14th, doesn't mean Bitcoin will hold up as long, because Bitcoin could be leading, it could be lagging. You could bounce off here and just go sideways again and start compressing your volatility. But if this does fall down, look at this, you're sitting right on the 618 at 27,466. You see this? These multiple candles stacking here, trying to close above it here. But if you do start going down, your one fib that you really need to look for support is 26,631. Okay, 26,631. You want to hold that. You've already tapped it here. And then coming down, if you lose that, you're going to 25,280. So, guys, the upside target, again, I've showed you this before, but let me go ahead and show you this on the daily. If Bitcoin did get more bullish and start breaking out more to the upside of its trading range, like I want to see it pull back and then pivot out. That would be my cap, okay? Even if the Nasdaq and S&P do get more bullish, I'm looking at Bitcoin at 31,180. That's the upside. Still a very nice move, don't get me wrong. But guys, these are all rallies to fade because of the market cycle. Again, like, it's a red alert signal what the yields are doing, okay? With the bonds, it's a red alert signal that they have come down so much. Just remember, just a couple of weeks ago, the 2 year was at roughly 5%, and now it's 3 something. Okay, this is massive volatility in the bond market because the banking crisis and everything else has triggered this fear, this panic that the Fed is going to have to cut rates. And what did Jerome Powell said? Führer Powell, what did he say at his press conference? Cutting rates is not his base case. He plans on keeping rates in place the whole year. Now, the market doesn't believe him. We'll see who wins out that argument, but he says he's not cutting rates. So that's Bitcoin on the 8 hour, guys. Nasdaq off of its low is up 24.28%. And again, you can see this here on the 3-day chart. You already have this beautiful double top pattern. Okay, let's go ahead and just fib this thing out. Go from our low to our midpoint high, down to our low. 12,967 is key resistance because you almost got there before and you got there and got rejected. Okay, key area to watch. If the Nasdaq got more bullish, if more money came into the marketplace, if the euphoria kicks in and people just gotta own Peloton, GameStop's up 40%. There's so much inflows of dumb money coming in, buying dumb stocks that have no business having value, like First Solar. Okay, that trading at 188 PE, or Nvidia trading at 150 PE. This is crazy going into a recession. You guys have to understand how crazy this is going into recession. But basically, guys, you got to understand there's only a couple different types of people in this marketplace. There's big money, which is dumb money, but these are the institutions and everybody else that goes on TV and tells you, oh, recession is not our base case, Bob. We just see an economic slowdown. And then there's retail, which 80% of them lose money. And then there's us. We are the market matrix members that took the green pill and look to profit in this marketplace. Okay, that's us. If you understand the trading psychology going on in this marketplace, you should be excited when you see rallies, when you know what's coming, because a recession is all but certain. All of the leading economic indicators are screaming it. And the big thing is, guys, the market is not prepared for it. What do I mean by that? Because I see all the time in the comments people saying, man, everybody's so bearish. Everybody's so bearish. Let me tell you how not true that is. A recent survey was done for all the Wall Street analysts where they think the S&P will be this year, and the aggregate number was 46 1,600. Okay. We're below 4,000 now. That's up 17% from here. So Wall Street is not pricing in a recession. This is why bubbles wreck people. And you guys are not going to get wrecked because you're watching this channel and you watch other channels, and you guys are the educated few. You 28,600 awakened, beautiful individuals. You are the educated few that understand what's going to happen in this marketplace. Most people do not at all. So the Nasdaq, guys, if it comes back up here, 12,967, this is where we've been shorting it in this range. Our last short was 12,875, and it fell down 250 points. We've been intraday trading this in our Discord. One of these will be the breakdown move. Obviously, if the S&P holds out till April 14th, you're going to just be banging your head around in the Nasdaq as well. Maybe get a little bit more euphoric, come back down. But that next level up is 13,223. But you really got to flip that 12,967. It's a very important number to flip, because you haven't been able to get above this without having massive supply dumped on you, except for your one euphoric rally. Okay. So watch that number, take scalps off that number. Guys, the DAX, again, this is something I love to trade. So the German economy as a single country is the third largest economy in the world. The third largest economy in the world is a single country. That's US, China, Germany. I guess Japan and Germany go back and forth. Doesn't matter. What does matter is that the DAX, okay, this is a German 40. This has Volkswagen, Mercedes, BMW, some big biotech pharma companies in here as well. This moves almost candle for candle. It bases and rallies and dumps with the S&P, as you can see here. But the key thing is, the DAX outperformed. It's up 33%. It outperformed the Nasdaq. The reason this is key, look at where your 200 is. Now, in Y2K, the DAX went down 74%. The Nasdaq went down 84%, but the S&P only went down 50. So this is a fantastic index to track and to trade. And where do I like this index? I like this back up here at 15,404, or the 618 at 15,664. And if we do end up hitting our head and getting a little bit more bullish, because right now what you have here on the daily, you have a Gartley pattern forming. There's your low, and then if this holds, that's your higher low. Okay, so let's go ahead and take a fib projection just based off of this. Is there a trend-based fib here, guys? And come back down. Look where you have fib confluence here for resistance. The 618 and the 46 stacked up at basically 15.4, okay? 15,394. So that's a strong area to watch to see if you get back up there. You're trading at 1571 right now. So watch 15.4. If you flip it, then I like it back up here towards the top, that 15.5, the 15.7 range. Okay, to 786 at 15.543. Key area, but you got to flip 15.4. If you don't, then you're just setting up for a beautiful double top right here. Okay, so it's something else to pay attention to, because this thing has further to fall. Your 200 is down here at 13.8. 13.8. And I guarantee you, if the Eurozone inflation being 8.5%, your interest rate at the ECB is only 3%. So you may lag some because your interest rates haven't kicked in yet. But having said that, you base and rally. Look, you bottomed in October, just like the US equity markets. You base and rally and dump and confluence with the American markets. So when the American markets turn down, fully expect to see the DAX dump. Okay, so this is, again, something else you can trade on SimpleFX. Looking at gold, guys, we talked about this. Where is the best place that you should be waiting on gold? 2055, right? 2055 is the magic number because it's the 1618. It's 2055, and you keep getting rejected at 2000. You see this? Why do you get rejected at 2000? Because you keep getting rejected at 2000. So again, gold and silver can break either way. My thesis is that gold and silver will crash just like they did in the great financial crisis. It's a mini crash cycle. They bottom out first and then they shoot back up, okay? And again, gold, these are 20% down moves. So you get back up to the 1618, you're coming back down again. These are 20% moves. And then if the crash actually kicks in, I do believe you're going deeper to that 1500 range on gold before you massively rebound back back up. But you got to get up to that 2055. And again, if you get up to that 2055, because this is a fear trade and you hold it and you pivot and you look to break out, that's where I would be bullish on gold. Okay. But be careful because lots of people got bullish on gold. This was like peak inflation back in March of 2022. You see that? And then it dumped 20%. And again, over here in August of 2020, gold got up to its peak. Obviously, after the pandemic scare, gold got up to the peak and then dumped 18-20%. So this is a key range to watch, and gold keeps getting rejected at $2,000. So watch gold, okay, guys? And let's go ahead and look at silver. Silver getting rejected at the 618 at 23.48. And again, you have this beautiful double top that's forming right here. If silver gets a little bit more bullish, right? It's got a little bit of time while the markets haven't dumped yet. If silver gets a little bit more bullish, watch your 786 at 24.27. And if it ends up just holding at one of those two levels, then watch for this double top to print. If you cannot flip the 786 at 24.27, if you can't flip it and get a pivot out to the upside, this is a beautiful double top to trade because again, where's silver going? Well, on my chart, $16.42 before it rebounds once again, okay? And again, guys, these are targets based off patterns. If the dump is really hardcore, it can go deeper. And if the dump, is not as bad as I think it's going to be, it could go shallower, but it's going to be pretty bad if the S&P loses 1,000 handles on it. So looking at oil, guys, again, off what? I said 50%. Well, let's see what we're off here. Off the high to your look, 51%. I'll try to do better next time. 51% you're down. So commodities are trading down because they're pricing in a recession. You use less energy. Copper's down as well, Dr. Copper. But commodities trade down pricing in a recession. By the way, this is not the 200 moving average here. This is the 300 moving average. So you really need to hold this. And if you want to look at this from a trend-based fib perspective, take that high, come down to your low, go back up to your next high, and you almost got to the 1618. So you have to hold $62.93. If this gets any worse, guys, then you're starting to look down into the 50s and the high 40s for my next target, okay? Coming back down, something like that, and coming back down. Could this happen? Yes, it could if the market gets really scared of a recession, if unemployment starts shooting up. We went over the unemployment chart last video. All things to consider, guys. I hope you guys, man, it's slightly over half an hour. It's trying for 20 minutes. But I hope you guys are armed and dangerous now. Watch for solar, FSLR, watch Tesla, watch Nvidia. Let's see if the S&P just keeps banging its head here all the way out to April 14th, guys. And if it starts falling apart before that, you know the levels. Keep your eyes open. Look for the next video, guys. Like, comment, subscribe. I will answer your comments as always. Have a fantastic evening, everybody. I'll talk to you guys next video.